Hi there, guys, and welcome to this week's edition of the Weiss Crypto Sunday Special with me, your host, Chris Coney. My guest analyst today is Juan Villaverde. Juan, welcome back to the Sunday Special, mate.
Thanks for having me, Chris. Pleasure to be here.
Glad to have you, mate. So today's topic, I've called it the increasing scarcity of Ethereum could lead to higher prices. So let me set the scene here. What we're talking about, if the viewers aren't already aware of this, Ethereum just went through an upgrade called the London upgrade. I think they called it that because the developers meeting where all this was hashed out was in London, right? So among many other upgrades, one of the major ones that everyone's been talking about is Ethereum Improvement Proposal 1559. So that's probably what you've heard in the headlines, Ethereum Proposal 1559. And why this has been talked about quite a lot is it introduced a new fee mechanism into Ethereum. So quick backstory, the old fee mechanism in Ethereum was every time a new block was added to the Ethereum blockchain, the block reward was given to miners. So that was newly created Ethereum every block, which is every 15 seconds. So the miners would get that, and they'd also get all the transaction fees in the last batch or in the last block of transactions. So those were two revenue streams, newly created Ethereum and all the transaction fees in that block. That's now changed. So there are now three numbers to keep a track of. One is the block reward, the newly created Ethereum. One is this new thing called the base fee. I call it the base transaction fee. And then the third one is called the miner tip, right? Not miner as in small, as in Ethereum miner. So under the new mechanism, the block reward is currently 2 Ethereum per block. So if an Ethereum block is approximately every 15 seconds, that means every 15 seconds, 2 new Ethereum is created and rewarded to miners. And whatever Ethereum is worth at the time is whatever it's worth. So that's the block reward. The second one is this flat rate base fee. And that's something that's like a bare minimum transaction fee that everyone pays, right? That's why they call it the base fee. And this goes up or down depending how full the previous block was. So there's this algorithm that tries to keep the blocks half full. So if the last block was more than half full, the base fee goes up, almost to discourage transactions. And if the last block was less than half full, it lowers the base fee to encourage transactions. So that's pretty straightforward. The key thing that's got everyone excited about this feature, though, is all the base fees that are paid in Ethereum don't go to the miners. They get burned. So that Ethereum gets destroyed and removed from circulation. So straight away, you've got this toing and froing between the new Ethereum that's mined as the block reward and then the amount that's destroyed or removed from circulation in all these base fees. So when the network's really busy, you're burning all this Ethereum, right? And the reason I called this episode potentially increasing Ethereum prices is that now you've got this Ethereum destruction going on. And if that outweighs the amount being mined, you've actually got deflation, which Juan and I will talk about in just a second. So the miner tip then, which is the third one, this is this extra fee that you can include optionally with your transaction to make sure that your transaction fits into a block. So say scenario A, 200 transactions need confirming in the block, all waiting to be confirmed. And all of those pay the base fee because they have to, but no one includes a miner tip, right? So if all those transactions fit into a block, that's fine. All those transactions get confirmed. If they don't fit into the block, then the miners decide how to handle that. First come, first served, whatever. They decide that. Scenario B, right? So there's the same 200 transactions need confirming in the next block, but only 100 of them will fit into the next block. And let's say 50 out of those 200 transactions include the base fee, which all of them do, but 50 of them include a miner tip as well. So that means when the miners look at the 200 transactions waiting to confirm, they have to pick 100 of them to actually put into the next block. Well, they're definitely going to choose those 50 that have the base fee and the tip because they make more money. And then I'll just have to figure out how many of the remaining 150 to include as well. So then scenario C, which is more extreme, is where 200 transactions need confirming in the next block, but all those transactions include the base fee and a miner tip. Well, what if all of those won't fit into the block? How does the miner decide now? Because they've all got a base fee and a miner tip. Well, they'll probably do what they did in the old system, which is they'll pick the transactions with the biggest tips because it's within the miner's interest to do so, right? So they'll look at all the 50 transactions of the greatest tips and put those into the next block, right? So this ultimately creates what I call an algorithmic monetary policy. And it boils down to that ratio between how much new Ethereum is coming into existence, currently 2 Ethereum per block, and how much of it is being destroyed or removed from circulation with these base fees, right? So that is once around the monopoly board in terms of how that system works. The big question that everyone's been debating is, how on earth does that alter the tokenomics of Ethereum, its value, how it's going to be priced in the future, whether it's going to be inflationary or deflationary, and so on. So I'm going to bring Juan back now. I've given that initial setup and see what his views are on this. So Juan, how do you feel overall about this here upgrade 1559
Okay.
in general?
So to be perfectly honest, I am a very active Ethereum user. So for now, I would say, let me start by this. I have mixed feelings on this. But however, like I said, as an Ethereum user, I can say that, yeah, the user experience, if you're trying to transact on Ethereum, has definitely improved. Mm-hmm. The fact that there's this base fee, the fact that blocks are actually bigger now, it means that you have a very reasonable chance of fitting your transaction in the next block whenever you submit it. In fact, I've had to wait in the past for hours, sometimes even a day, to have a transaction confirmed on the Ethereum blockchain.
Is that because you propose your transaction and the wallet figures out how busy the network is currently, and then right after that, loads of other people pose transactions, and what you think is going to take 15 seconds ends up being outbid by everybody else, and it takes hours?
Yeah, you can get outbid, and usually the big problem with Ethereum was bidding wars.
In the old system, that was the case, right?
In the old system, yes. These bidding wars were ridiculous because blocks would sometimes get full with the same transaction. People just not full with the same transaction, but transaction fees would go up because I would post a transaction on typically to trade on something like Uniswap. Mm-hmm. Then somebody would look at that transaction and go, hey, I can front run this if I pay the miner a little bit more. So they would just increase the fee by a little bit. Then that transaction gets included. And sometimes what would happen is a lot of people would look at the mempool. This is where unconfirmed transactions are sitting, and they start these bidding wars before they're even mined, before these transactions even make it to the blockchain.
You've made your intention clear, and you want your transaction confirming quickly before the price moves. But before it's confirmed, everyone else can see your intention. Mm-hmm. That's right.
Yeah,
right. Okay.
Exactly. And so miners were basically extracting rent in this sense and pushing transaction fees higher than they would be otherwise. If this incentive of collecting that transaction fee was removed, I believe that what developers reasoned, and rightly so, is that if you remove this incentive, if miners no longer are able to collect these fees, then they're probably just going to include transactions on a first come, first serve basis. It's going to at least reduce these bidding wars. I think this is the theory. The theory is that also it makes fees more predictable, right? Because in Ethereum, it's important to know how much you should be paying. Another issue that everybody had before EIP 1559 is that you sometimes wouldn't know how much do I really need to pay to have this transaction confirmed. I don't know. When you have the base fee now, you know how much it is, okay? If you pay the base fee, you have a very reasonable expectation of having that transaction included in the next block. And the blockchain itself will tell you, hey, this transaction should be 100 Wei, Wei being the unit of account when you're paying Ethereum transaction fees. Which a Wei is a very small amount of Ethereum, really. So the fact that this upgrade makes fees more predictable and less subject to these bidding wars. By the way, I skipped over a lot of details on these bidding wars and how they work. I mean, if you want to look into this, just Google miner extractable value and dark pools, and there's whole debates on this issue. I mean, it's a huge problem on Ethereum. So this goes a long way towards alleviating these issues. I don't think they solve them completely because, like you said, if everybody includes a tip, then you're back to bidding wars again.
I was going to say that. But my scenario C, where all the transactions that fit into the block have a minor tip, you're back to the old system again.
Yeah, during high network congestion, during peak bubbles, for example, when all asset prices are surging, you're probably going to go back to the, I mean, it's going to resemble the old system. This is not going to work for those circumstances. However, when there's a reasonable amount of load on the Ethereum network, yes, this goes a long way. This makes things easier because, like I said, now you have the blockchain telling you how much you should be paying if you want to be included in the next block. Before, wallets have to figure this out. And it's not a good system. Actually, wallets did not have a good way. They use these algorithms to estimate what fee you should be paying, but they didn't do a good job at this.
So
sometimes
you look backwards at previous blocks and transaction fees.
Yes, they will basically look back at previous blocks and give you a number and say, well, if you use this number, you're probably going to get your transaction included. And sometimes it would work and sometimes it wouldn't work. Sometimes you would have to wait an hour, and the network load was not even that high. So you're left thinking, why? You just told me that 50 was good enough, but I can see now that it's 90. Sure. So how come now I have to overpay? So it created all manner of problems. I think the root cause of the issue is that Ethereum's fee structure was imported from Bitcoin. And it works on Bitcoin. Who cares? This is not an issue for Bitcoin because Bitcoin's a simple system. The idea that you need to rush your transaction and send it immediately on the Bitcoin network is somewhat less true. You can afford to wait if you're moving Bitcoin around because it's just a payment. Whatever it is, you're just paying. But on Ethereum, you're using smart contracts. And sometimes you really need your transaction confirmed, and you cannot afford to wait. So the fact that fees, this new system, has predictable fees, or at least more predictable fees, I think that's a huge plus. I think that's a huge win. I was looking forward to this update. I've had a chance to use it for a few days. It works. I actually had some doubts. I thought, well, maybe it doesn't work because the paper for this, I don't know if Vitalik wrote the paper, but he wrote about it years ago when he was saying, well, transaction fees on Ethereum are usually 5-way, but sometimes they go up to 50. So during those times of when it goes to 50, then you should probably have this new system that's gonna smooth things over. Now you're gonna know. Basically, I think the concept for him was block sizes are going to be more variable now. So we're going to create this system where this is the fee, and if there's too many transactions, instead of resorting immediately to a bidding war, we're just going to increase the block size. This is part of the update too. Blocks, like you said, the network targets a certain block size. Right.
Well, actually, the block size is the same, but it's targeting 50% capacity. So they call it the gas target.
Exactly.
Right? They're looking for 50%.
Exactly.
So if you can still fill a block up, but that would jack up the base fee for the next one quite a bit.
Exactly. So, yeah, but practically speaking, what they're trying to go for is because since the Ethereum network targets a certain block size, what they're trying to go for here is, look, if there's more transactions than we anticipated, then maybe the block gets a little bigger, but fees don't change. That's what they were going for. And I think it's beautiful. I think it makes sense. So that's what I like. I like the fact that fees are predictable. I like the fact that they addressed these bidding wars, and for now, it seems to be working. I do believe, like you said, scenario C, I believe that during extremely high congestion, network congestion, I think it's going to be pretty much the same as it used to be. But that's fine.
That's going to be tested soon. I'm sure.
That's going to be tested soon. And we'll see. I mean, maybe, again, since if the blocks are full, the fees continuously go up, I think maybe may reach some sort of equilibrium where, hey, the fees shoot up, but the base fee goes to like 150. And if you pay 150, boom, your transaction is confirmed. We'll see. Like I said, I have a pretty good experience doing this, and I've had to wait hours and hours and hours to have transactions confirmed on Ethereum. It got to the point where I moved to sidechains and layer 2 solutions because I had to. Could not afford to use Ethereum anymore. And the same thing was true for a lot of people. However, so that's good. I like the fact that they're going for more predictability with fees, and that they're reducing the incentive for miners to participate or be complicit in these bidding wars, because they have been at times being complicit. These are perverse incentives that miners have. So that's good. What I don't like is that, for me, there is a contradiction when you say, well, we want to make Ethereum more affordable. We want to make Ethereum easier to use, more predictable. We want to make sure that these transaction prices don't just suddenly surge and there's nothing you can do. We want to make sure that this resource is more efficient in terms of how it's used. But hey, we're going to start destroying it. We're going to start making it more scarce. For me, that helps speculators only. Now, I realize why they did this. I realize that they need to disincentivize miners. So what do we do with this money? Well, no one gets this money. We're just going to destroy it. I don't know if there's a better solution. What I do know, however, is that as the price of Ethereum goes up in fiat terms, I mean, we're still living we continue to live in a fiat world. Things are priced in dollars. And when people say that transaction fees on Ethereum are high, they don't say, well, I just had to pay 0.15 Ether for this transaction. They just say, I had to pay $500 for this transaction. Okay. So what if you introduce an upgrade that doesn't necessarily make the price of Ethereum go up, but it certainly goes in that direction, right? If you're making this asset more scarce, you're helping its price go up. And I think we need to get into this discussion of, is it a good thing for the price of Ethereum to be as high as Bitcoin's, for example? I argue, no, it's not. You don't want this on Ethereum. You do not want Ethereum to be unaffordably expensive, because what that means is smart contracts on Ethereum are unaffordably expensive and people cannot use Ethereum. You see this contradiction where people look at Ethereum, they look at network statistics, and they go, well, a lot of people are using this thing. All these applications are running on this thing. So that's bullish. That's good. I'm going to buy Ether. However, if the price of Ether is too high, this usage is destroyed. These applications no longer running Ethereum. It's discouraged. Viable, yeah. So the speculative act of buying Ether because you like the Ethereum economy does not help the Ethereum economy.
Like buying millions of barrels of oil and sitting on them.
Because you're bullish on oil. It's like, well, I like the fact that this world economy, these humans in this planet, they all like oil. I'm bullish on oil. I'm going to corner the market. I'm going to buy all the oil there's available. Well, if you do that, people will not be able to use oil anymore, and they'll go away from it. Well. And now, now you're sitting on this useless resource, right? Now you're sitting on a useless resource because you cornered the market. You bought up the entire oil supply because you're so bullish on oil. It's an extreme example, right? But if you take the supply away from the market because you're bullish on the fact that other people are using it, guess what? People will probably look for alternatives and stop using it. And that kills your case. That kills your investment thesis. Now it makes no sense for you to own this oil because no one uses it anymore. And I'm not saying this is going to happen with Ethereum, but what I'm saying is that's what you're contributing to. If the price of Ethereum goes up, you're contributing to people migrating away from it. And this has already happened. Look at Binance Chain. Why did Binance Chain go from nothing to, I think it's like the fourth largest or the third largest? I mean, it takes turns, but one of the largest. Exactly, because it was a cheap version of Ethereum. It could do anything that Ethereum could, but it was cheap and affordable. Why was Polygon so successful? Because it's an Ethereum clone. It's an Ethereum clone where fees are cheap. I mean, you don't even know how much you're paying because it's so low you don't care.
Oh, yeah,
So being cheap and affordable is a thing. I mean, it is something to strive towards, and if you're a smart contract platform. And this burning of Ethereum is detrimental to that end goal of Ethereum being the fuel for the decentralized economy. If this fuel becomes too expensive, we're gonna search for alternative fuel sources. That's what's gonna happen. This is what we're doing with oil right now. I mean, that's not why it's global warming, but it's also the fact that we're gonna run out of oil. So we better look for an alternative.
Well, that's valid,
this is the same thing. It's a scarcity issue.
It's like being bullish on commodities and wanting oil to go to $500 a barrel to make you money. If oil went to $500 a barrel, you bet your boots, by necessity, you'd have to look for alternative fuel sources, just by economic necessity, because everything would just skyrocket in price otherwise. It's just not economically viable. People wouldn't stand the price of goods at $500 a barrel of oil. So I'm with you on that one. And I suppose you have to use an extreme case to demonstrate the principle.
Exactly. Because, and by the way, this point of view that I have is not, I didn't just concoct it out of thin air.
Sure.
I went through this. I started trading very actively on DeFi with a price of Ethereum of around $300, $150, $200. I was using DeFi back in 2019. Back then, Ethereum was so cheap that many of these DeFi applications had no fee. You could just use them for free, essentially. Eventually, they had to start charging a fee. This was 2020. But in 2020, fees are still low enough that you're paying 50 cents, a dollar, $5. That would be an expensive fee in early 2020. So you would pay $5 for a transaction, and you would go, I don't care. By late 2020, you're looking at transaction fees that are in the $500 range, and you're thinking, should I do this transaction or not? Can I afford to do this? So I do a lot of arbitrage in decentralized exchanges. So the dynamics, and by the way, I don't have a small account. I think 99.9% of people have smaller accounts than I do. So if I'm having these issues, the overwhelming majority of users are having these issues. This is a fact. So suddenly there's a problem that you never even thought about before, which is, how do I make sure that all these things that I need to do on Ethereum use Ethereum the least? How can I minimize my transaction load on Ethereum? Because this is going to kill my entire strategy.
Okay, you could take Ethereum out of that though and say it like this. How do I do as least activity on the expensive platform?
Yeah.
And that could count for, it doesn't matter, right? That's your point though, is just like in traditional investing, fees and taxes are the two things that drag your returns, put a drag on your returns, because that's money you can't then compound. So is it similar concept? The more fees you pay, the more money that could have been invested.
Yeah, not only that, sometimes let's say you're making, I don't know, this hypothetical example, let's say you're making $1,000 a month on arbitrage.
Okay.
Now, let's say every transaction is suddenly $200. Let's say you need to do 10 of these transactions per month. Oops, you're no longer profitable.
I was going to say, yes. Would you say then that,
I have to stop doing arbitrage.
Well, or you move to a second layer or something like that, like you said.
Correct.
So
yes.
Your opinion that destroying the Ethereum doesn't help Ethereum, would that be the same as staking Ethereum in a DeFi application? Because that's still removing it from supply, but it's not destroying it. So is there a difference there between banning it for transaction fees, removing it from supply permanently, and temporarily removing it from supply by all the people staking Ethereum in DeFi applications?
I think there's a difference, and the difference is, like you said, this Ethereum is not destroyed. It's locked, but it's not destroyed. It's still here. So it could be released if the price was high enough. Let's say, for example, you could see free markets, do their thing. When the price of an asset tends to go up, supply tends to increase. Now, in the crypto economies, right? In crypto economies, we do not have this, but if there are stockpiles of Ethereum sitting there somewhere, and by the way, we see this with oil, and the price of Ethereum goes up, guess what? A lot of this locked Ethereum is going to be released and sold into the market, and that's going to help prices go down. But if you're destroying it, if you're permanently removing this from circulation, there's no offsetting that. This thing is gone. Yeah. So does it make sense to take the fuel of the decentralized economy and just burn it? Does it make sense to do that? I argue that no, it doesn't make sense. You should not do this. Again, I don't know what I would do. I think I would, however, distribute it maybe to stakers. If you're staking Ethereum, these transaction fees go to you, the staker, not the miner. Maybe something. I think that Ethereum has become such a scarce resource already that you do not want to add fuel to that fire. And yet this upgrade does exactly that. So this is my biggest issue with Ethereum. And by the way, I want to say something controversial here. I think that the reason you do not hear this argument more often is the overwhelming majority of Ethereum participants are speculating on the price of Ethereum. So you always get the speculator's point of view, which is something that is irritating to me. You always get the speculator's point of view. Oh, number go up, good. No, not really. Arthur Hayes, founder of BitMEX, one of my favorite guys in crypto in the entire world. He's an excellent writer, and he's thought-provoking. He wrote an essay, very good essay, on Bitcoin and Ethereum. He basically said the issue for Bitcoin is, he was just trying to poke holes into both of these. He said the issue for Bitcoin is, well, we have the halving. We're cutting issuance every 4 years. What if transaction fees cannot make up for that? Well, the network would freeze. It would cease to make sense. So, conclusion: Bitcoin needs people to use it, because eventually the block subsidy is going to go away, the miner subsidy is going to go away, and we're going to need transaction fees to replace that subsidy. Good, that's an excellent point. And yes, it's true. I argue that the biggest weak spot in Bitcoin is this. That's the only point of speculation. You are speculating with it. You're speculating that, yes, a lot of people will be using it. And he points this contradiction of being gold and a store of value, which is something you do not use very often, and at the same time requiring that people use it. So it's like, on the one hand, you're telling people to buy this asset and never use it again. And on the other hand, you have a network that is structured in such a way that you need people to use it. So how do you balance these two things? Yeah. Yes. So that is Bitcoin's biggest weak spot. And for Ethereum, I think he correctly identified that you cannot be this uber deflationary a la Bitcoin store of value, because that's going to completely destroy your fundamental use case to be fuel, energy. Energy, we all hear this often. Energy needs to be cheap and abundant. Cheap and abundant. That's energy, because everybody should be able to afford to use it. What if it's extremely expensive? What if it goes up 10 times? What if the cost of doing business goes up 10 times in a year, year after year? Speculators on Ethereum are going to say, that's a good thing. Users of Ethereum are just going to pack up and leave.
Which
and if all you have left,
long term.
Exactly, it makes the price collapse, because now there are no users left, only speculators.
Because the product isn't any good.
Yeah. So I thought that was an excellent point. I thought, yeah, because he said, listen, yeah, they're doing AIP 1559 now. They're going to be burning fees now. But these guys have already changed monetary policy like 3-4 times in the past. There's no guarantee that they're not going to go back to the drawing board on this issue of burning fees and go, maybe that wasn't such a good idea. We need the price of Ethereum to go down. I always argue that Ethereum's market cap, sure, it can be high, but Ethereum's market cap can be high, and yet the value per token can be low. In fact, I think it should be. Like each individual unit the price of each individual unit should probably be low. And if fees are priced in those units, then it's going to be cheap and abundant. Now, of course, the counter argument to all this is tech upgrades. Like the difference between oil and Ethereum is you can introduce upgrades on the Ethereum economy and make this thing 10,000 times more efficient, 100,000 times more efficient. And this can never become an issue.
The improving efficiency of an internal combustion engine, and instead of getting 10 miles per gallon, I get 100 miles per gallon.
Yeah, only in Ethereum you go from 10 miles per gallon to 10,000 miles per gallon.
Okay.
And all of a sudden the price doesn't matter. This is possible in Ethereum, and in fact, this is what you would get with Ethereum 2.0 and a fully sharded network. What happens between now and then, though? What happens between now and then? What if some competitor comes along? Yeah. So this is, I think this issue will be revisited at some point. Even though I do not think I'm a holder of Ethereum, I haven't sold any, I still use it. I don't think this is just like I'm not worried about Bitcoin's usage statistics right now. I'm not worried about Ethereum burning Ether tokens right now. However, I do not think it's a good idea, and I certainly resent all these comments that basically reflect a lot about the current state of the crypto market, which is it's dominated by speculators. Because the only reason you would get consensus on burning is good is because most people are just long Ether and they don't care. They just want the price to go up, so they don't care. As a user, it's not good. The price of Ether going up over the past 12 months, 18 months for me, it wasn't a positive. Yeah, I made some money on the Ether token itself, but I was actually using DeFi applications and I got killed by by rising price. I got killed. And so did a lot of people. So you're excluding the overwhelming majority of people. There was another issue. We want this thing to be, the world's distributed computer that everybody has access to. Well, guess what? Most people don't have access to Ethereum. It's too expensive. Like if you have local communities, small projects experimenting with smart contracts, they're using Binance Chain, which I think is shameful, because Binance Chain is completely centralized. And this is what they're experimenting on because that's all they have. They really cannot afford to use Ethereum. So yeah, mixed feelings on EIP 1559. I like the fact that fees are more predictable, but I absolutely do not think that Ethereum should even entertain the idea of competing with Bitcoin on being a store of value, which is the narrative that some people are floating. It's a better store of value. It should not be a store of value. It's fuel. I always think of them as if Bitcoin is potential energy, Ethereum is kinetic energy. It's released, it's used. Ethereum is something you use. I keep a balance of Ethereum and I use it constantly and I refuel Ethereum constantly. I buy and sell to use. I use this thing.
So interesting. That's the model I've used in the DeFi Revolution course. I've intentionally taught it this way because I think it's an easier logical model to get your head around. The way I've taught it is that when I'm instructing people, I say, right, buy a couple of $100 worth of Ethereum and put it in your MetaMask. Then turn some of your dollars into crypto dollars like Tether and then put that in your DeFi wallet. And then from there, I'm teaching people to invest their dollars for dollar returns and then to just burn through the Ethereum as a utility token. I haven't explicitly said that Ethereum is an investable asset because I just think that will confuse people.
Right.
I mean, that's the way it was designed. Yeah. The irony is that the reason that the ETH token is valuable is because it's useful, but it's not meant to be hoarded. It's meant to be used, like you say. And Polygon is the perfect example of that because, I mean, what do? I keep probably like 0.2 Matic in the wallet at any one time, just to prevent bricking my wallet. But any other Matic I've got is like on loan or whatever, right? You don't even think about it though. Don't even look at the transaction fee. It's just ridiculous.
Yeah, you don't even think about it.
No,
I overpay on Polygon. I just overpay because I can afford to, and I have my transaction confirmed within seconds if I overpay. So I'm gonna go, okay, the price for this should be 1.5 to have it confirmed. I'm gonna pay 10, and bam, it's confirmed immediately.
It's still negligible, right? So that's why we shouldn't worry too much about this because there are ways around it, right? The base layer can do what it likes. You also said that 1559 wasn't designed to increase the price of Ethereum. It was designed to make transaction fees more predictable. That's a good thing, right? Because it's better user experience. The side benefit of burning the Ethereum has all the economic impacts, which you say are undesirable in the long run, right?
They're undesirable, and I'm not too thrilled about the fact that the burning of fees has taken over the narrative. What most people don't know, this is just a fee upgrade to make fees more predictable and to disincentivize a group of people who are extracting too much value from the system by rigging the fee game. And these were miners. A lot of miners were colluding with certain people to make fees go up and enrich themselves. And Ethereum developers correctly saw this and said, you know what? You're not getting those fees anymore. We're going to destroy them. I always question, I pose the question, is there a better way? Is there a better way to distribute these fees? I think you could just distribute them to token holders instead of destroying it. I don't know how you would go about doing that, so I'm not even going to go there. But I think there's more elegant solutions, which is why I think eventually this issue would need to be revisited. I don't think you can afford to burn all this ether. I think you need to come up with something better. And maybe you have a treasury system and it gets locked in a contract and token holders can vote on how this ether is spent. But destroying it seems pointless. It's like, why would you do something like this?
Well, isn't the game going to change again when we get to the launch of Ethereum 2.0? Because exactly what you just said is going to happen. The mining rewards are going to go to holders, right? And the miner tips are going to go to. So that's how it's going to work, isn't it? When we get to Ethereum 2.0, when we go away from proof of work, well, then the validators the ones that have staked Ethereum, they're going to get the block reward and the miner tip. And then this base fee is still going to be burned. So,
like I said, if you want to have one prediction as a takeaway from all this, is this issue of how the monetary policy of Ethereum works will be revisited. I'm pretty sure they're going to have to come back to the drawing board and say, okay, this is not working. I mean, it is working, but hey, I think we can do better. And I think they can do better. I think that the brute force, low-hanging fruit solution is no one gets this ether. But I think you can disincentivize miners by giving this away to a third party, like a treasury. Like I said, you can create an entire governance structure out of this. I mean, now you're collecting, it is being said that about 100 million ether has been burned. That's a lot of value that's just being destroyed. Why don't you keep it in a smart contract and then have people vote on how it's spent? That seems to make sense.
I'm looking at it right now.
It's a lot of money.
We got 32,000 ether. It's $102 million at current prices have been burned.
That just hurts to see. That's just donate it to charity. Seriously, why destroy it? That's a lot of value just being evaporated for no reason. Seriously, donate it to charity.
Well, it's $10,000
give it to someone
right now.
Ridiculous.
Or per minute.
It's wasteful.
$10,000 a minute.
It's wasteful. You're wasting resources, quite literally wasting resources.
But check this out, though. Don't you find this slightly different to critiquing, say, the monetary policy of the Fed? Because A, it's changeable by the community, and B, if we do this experiment, the best bit is we've got all the data transparently on the blockchain to review for everyone to see. It's not like a clandestine thing, right? We can try it in the real world, out in the open, in the live environment with real economic actors, human action all over the place, proper, Austrian economics in action. And based on actual experimentation, the community can go, this is working for us or it's not.
100%. Like I said, I have mixed feelings on this upgrade because I think this one area of the upgrade needs some rework, in my opinion. I think just burning fees, maybe it makes sense for now. It's not going to be that big of a deal, but down the road it may be. And like I said, there's probably better uses for this money anyway. But overall, I like the upgrade. And I think it was necessary. Like I said at the beginning, Ethereum's fee structure was designed for Bitcoin. They just imported it over from Bitcoin, and it just doesn't make sense for a smart contract platform. These fees need to be more predictable. They can't be just a wild free-for-all like it is on Bitcoin.
To your point about having Ethereum be cheaper in dollar value, that is actually why you are suggesting that say I'll put all the fees to stakers, because the objection of a speculator will be like, well, Juan, that's going to create more sell pressure. And you say, good, it's going to push the price of Ethereum down and make it more useful. Right?
Yeah. The price of Ethereum going down is a good thing.
Yeah. So if you reward it to stakers, they might just sell it, increases sell pressure. And you're saying good, because that makes the utility of Ethereum open to more people. So that's the counter argument.
However, I was careful to say, however, that I do think the market cap of Ethereum overall should be high. This is because when it moves to proof of stake, market cap equals security. The larger it is, the more difficult it is to attack. So market cap as a whole, $10 trillion. I don't care. But what is the price of Ethereum? What is the price of each individual unit? I don't know, $100.
That favors inflation. Lots of tokens, very cheap, massive market cap.
Yeah. You can also do a hard fork where you just do a split and you split each ether 100 times, and then everybody has more, and market cap is the same, and now fees are low. Like I said, I don't pretend to have all the answers here. You do need to have high market cap for security reasons. However, it's a careful balancing act where, on the one hand, yes, you want this thing to be worth a lot of money, so it's more difficult to attack. But on the other hand, you want fees to be low. And if prices go up, all else being equal, that's a bad thing. So, it's a careful balancing act. And like you said, I mean, they're probably going to experiment on this, and they're going to have to come back and tweak. And I know this is completely off topic, but this is exactly why Ethereum will never be a store of value, because you do not have deterministic monetary policy as you do in Bitcoin. With Bitcoin, you know exactly what monetary policy is going to be. With Ethereum, you just don't know.
Very hard money.
That is hard money. Predictable monetary policy. It's not deflationary versus inflationary. By the way, deflationary is anything for which there's more demand than supply. That's true of Ethereum. That was true of Ethereum before. It's true of Ethereum. That's true of Bitcoin. You do not need to destroy the token itself in order for it to be deflationary. You just need more people wanting it than there's supply of it. So, and that's not what makes it a store of value, by the way. What makes it a store of value is it's the fact that it's immutable. Nothing about it changes. And that's Bitcoin. That's not Ethereum. And that's a good thing. Predictable. You know what it is. You know what it's going to be. That's why people on Bitcoin, and rightly so, they're very reluctant to change things because they know that's the value proposition. They know that immutability. Well. Yeah. So immutability is the value proposition. With Ethereum, they just pushed an upgrade. Now it's slightly more deflationary. Okay, how do we know? They've already changed this, I think, 3 times. The issuance and what they're going to do with the fees. This has already changed in the past. It's pretty much a guarantee that it's going to change in the future. In fact, we know it will because they're going to go for proof of stake.
It makes me laugh every time.
What changes will that bring?
Right, exactly. So what makes me laugh when people find out what I do, the first most common thing people say is, oh, is it true there was only 21 million of them? Right, so that's the message that never changes. It's like everyone hears about that, but with Ethereum, you might be like, well, it was 21 million, but then there was this thing, it was this hard fork, and now it's different, and then it changed to this thing, and people are like, what the hell? You know? So it's not, you can't do
and
the
then you go,
message.
Okay, so you don't know.
Yeah. Well, it changes all the time. They're like, well, okay, fine. Okay, cool.
And that's a good thing because Ethereum is not Bitcoin. Bitcoin is not Ethereum,
exactly.
And these two should be separate. And that's
not
okay.
Comparable, exactly. Not comparable. Got their own uses.
Yeah.
Cool. All right, Juan, we'll wind it up there. For any of the viewers that want to have a look at the data, the thing I've got up on screen is it's etherchain.org/burn, and that'll show you the real-time data of how much Ethereum is being destroyed and whether it's inflationary or deflationary, whatever, in real time. But that's going to do it for this edition of the Weiss Crypto Sunday Special. Juan, thanks for being with me this week.
Thanks for having me, Chris.
All right. And so check your inbox for the next edition of the Sunday Special. Until then, it's me, Chris Coney, saying bye for now.